Hi, everybody. Welcome back. We are here with another one of your questions about work. And today, for reasons we will get to soon, we're talking about the earliest days of starting a company. And I am here. Well, I'm Roy, startup investor in the future of work. For those of you who have been paying closer attention, you may know that Karin is my partner in Bloomberg Beta. And so the question today, Karin, is, and you've got like so much perspective on this, so I can't wait to hear the different pieces, is I might want to start a company. What does it actually take to be a founder? And I'll just add, to me, some of the note here is that there are many people who kind of think like, oh, that might be cool, but I'm just not founder material, or especially I think people from underrepresented backgrounds often tend to do that. And so the question here is like, what does it take to be founder material?
So we all know starting a company is really, really hard, or at least if you don't know that, then you should know that as a starting point. And there are three things that I continue to see are core ingredients for being a successful founder and when you should decide you want to make the leap. And the first one is, and you and I have the pleasure of getting to see this all the time, is when does somebody have a really unique insight into a market? And it could be something that they just had as a real problem and they want to change it. So, today is one of those days when we're really excited because one of our founders, recently figured that out, right?
Yeah, I mean, so Doma today became a public company. I don't know what you say when somebody de-SPACs, because de-SPAC just sounds like something you do to like clean your bathroom. But
they started publicly trading.
They began publicly trading today, and Doma is a company that provides something called title on a home transfer. And they started out providing just title insurance, which is an astonishing thing to me that I didn't know, is when you buy a house, you actually buy insurance to make sure that the person who's selling it to you actually owns it to be able to sell it to you. You buy insurance on that. And Max bought something and noticed how expensive that was. And he's like, what is this? And, he did this thing that many founders do, which is they get frustrated by a problem in the world and they try to figure out how to fix it. And the difference in his case, so a failure mode is founders who think their thing is unique and then become deflated when they realize that it's not. Like, oh, we should have Zoom, but more fun. And like a lot of founders went out after that, including one whom we invested in, and came up with lots of great things. But what you needed was a truly distinctive angle on it. And many founders, particularly those at the beginning of their careers, fall in love with some idea only to discover it's not really that unique. And Max knew enough to know, how do I find out how the market is structured? How do I figure out what the components are in terms of like how I would actually enter? And he started out by only competing for one sliver of the market, which was refinancings in certain states. And he took one piece of this title process, which is expensive, which is just the insurance piece. And he realized not even for all properties, but for some properties, instead of it taking a week and going off and running around and sending all these people to municipal courthouses to figure out if some contractor filed suit over a renovation in the 80s, we could just actually provide insurance statistically, and they use technology to do that. And so that insight of like, here's a sliver we can get at, which if it works, then we can expand and fix the whole thing, is to me one of the ways that people find uniqueness, because it's a lot easier to be unique if you're looking at something more modest. If you look at something like the entirety of, I don't know, like some huge market, logistics or something, way harder to be unique.
And the beauty of that is he's also able to test it. So he gets data a lot more quickly as to whether or not something's there. And that leads us to the second thing that I think made Max exceptional and also got him to this stage with it. He did at record speed. I mean, to be able to be going public in 5 years is remarkable. And that second thing is he just had drive. I mean, when we met him, I just remember thinking to myself,
he's audacious.
Wow, this guy's a winner. I mean, he just so dedicated to driving change. And at the time when we originally were talking to him, like he didn't even, you'd known him for a while and had seen that arc of as he was thinking about different ideas. And then he went to go buy a home and it's like, wow, this is really broken.
And like all these things, there's a flip side to it where we meet plenty of driven founders who will I promise you I'm going to build you a unicorn. And it's like, yeah, but if you don't stick the landing, I don't care. Meaning, if you're going to try the triple reverse half flip maneuver, you got to stick the landing. And so it's plausible drive is this kind of thing of like, oh yeah, they say they're actually going to do this wild thing, and then they pull it off, and you're like, what? And so that to me is the thing that has to come with drive, is the reality of it.
And it's the dedication to hanging in there, because
Totally.
nothing necessarily goes smoothly from the start. So having that plausible drive and then continuing to adjust and adapt, I mean, as you get data is really one of the other things that makes it possible. And then the final thing is somebody just has to be more authentic, and as a result, able to attract talent and customers. I mean, Max was able to get big partners and a lot of credibility because he was sincerely going after this, and he is who he is. He's not trying to put on.
I have a question about that, because you've seen plenty of founders over the years who have attracted talent while being inauthentic, not necessarily ones you've invested in, but like phony founders, people who were like just selling a pipe dream. If you're talent, how do you tell the difference between ambition that's wild in a sense of like a wild animal, like it will hunt down its prey, or wild in the sense of a wild pitch that's just going to miss,
Yes, so there's a few things. I mean, it's certainly easier if the person has started businesses before, right? And then
Sure.
The other thing that has become, it's always been important, but doing reference checks, especially in this virtual world, being able to know people who've spent more time with people over time, and looking at the way the other thing that's also helpful is just seeing how they've navigated challenges before.
How do you see that?
Ask questions and then listen to the responses. And I mean, at the end of the day, it's not 100% accurate, but there is this element of judgment and gut that we get from speaking with people. And that's part of the beauty of having done this for so many years, is you start to
get a feel. Well, it's funny what you describe as gut, I just think of as repetition, basically, of you've seen it a bunch of times and you get a feel, like those guys in Japan who can tell like a male chick, like, bird from a female chick by just like, they pick it up and look at it, they're like, it looks like a boy. And it's apparently very hard to do, but you just do it through tons and tons of repetition.
When you said Japan, I thought you were talking about SoftBank and Masa.
Oh, no. But SoftBank, I mean, look, one of Masa's skills is seeing founders who are like Masa in the sense of being, wild like a wild animal, not wild like a wild pitch. And the thing that I've seen though on that is, one of my patterns I've observed is there are certain kinds of data that scream at you. Like, okay, somebody like committed a crime, it's screaming at you. Then there are other kinds of data that whisper to you, and we tend to overlook them. So for example, ethical concerns about a founder often come up as whispers. Oh, I don't know, he's maybe a little bit slippery. That's like a thing people say. And like personally for me, I've learned that when I start to hear those whispers, it's like, no, that you should turn up the volume on that, because that actually means the person is crooked and you should run in the other direction. And so that's one of the things that I think can happen from experience.
And that's a great point as well, is a lot of times it's more factors that rule out something.
Right, then rule it in. Now we have a comment that an anonymous comment that I think gets at a real talk issue about starting a company. So there is a financial aspect as well. Young and no or little debt is important. And then this person says, or someone who can help cover the bills. And so I'm curious, Karin, your thoughts on this.
So the good news is that things are getting less expensive to start, right? I mean, just in the past couple of decades that I've been doing this, AWS has emerged. There's all these different services where you can test things out a little bit more cost effectively. But that's part of when I say somebody's able to attract talent and customers, they're also able to attract investors. Like that conviction and belief is able to resonate with the
Well, but
investors.
even if they can attract investors, they may be earning less in salary than they otherwise could. And so, this one is I think a very complicated one, because there is real talk here of, like, of course, there are personal financial considerations to starting a company. And, I've written about this, about how you ideally begin to have a more honest conversation with your investors and other partners about your personal financial status, but it's hard. I categorically reject young as a thing for starting a company. We have backed founders in their 50s, I think maybe even in their 60s, who have done great. And there's plenty of data to suggest that older founders actually outperform younger founders. Now, people then say, well, but look at these great companies. Well, of course, if it's a great company and the founder is there for a very long time, then by definition, they will have started young. So that's kind of a quirk of the data more than anything else. And I remember a moment when I was considering starting a company, when a VC from a big firm said to me, Roy, you're just going to have to take a huge hit in your standard of living. And I was like, well, I'm not even living that high on the hog now. Like, yes, I had a house in the Bay Area, so that was for sure a thing. I had a mortgage, so I had plenty of debt. I had 2 young kids. And, part of it is like that line from Hamilton where George Washington says, figure it out, Alexander. You just got to figure it out. He's just like, figure it out. And that is easier for some than others. And that absence of an open on-ramp is something we care about a lot as investors, because we want to be able to write checks to people who might not otherwise be able to participate, assuming they can be extraordinary founders. But in my case, it meant I didn't take a salary from the startup. I kept another salary, basically worked 2 full-time jobs, which was extremely challenging. And my co-founder, she was the CEO, she was in a somewhat different position. But I think that it does require, this is a real consideration. And while I wouldn't say no or little debt is important, I would say that you have to solve your own considerations, and that's going to be different for every person. Obviously, here we are, 2 white people talking to each other about it. Plenty of people from other backgrounds just come with less family wealth, that kind of thing. I was lucky. My mom could write a check, a small check, but still a check.
And less network. I mean, there are a lot of founders that are able to bootstrap through friends and family. And
so what do you think about this, though, Karin, like of how founders should manage it?
So I completely agree with what you said. And the other thing that could be an option that I think we're both very supportive of is keeping your business a side hustle until you can fully go. Like, it actually is in some ways a demonstration that somebody has the drive and commitment and conviction and even the ability to make it happen if they're able to juggle having a full-time job. And
many of the best companies ever started as side projects. Facebook, GitHub, there's a long list. There's no rule that says your odds of success go up if you do it full time. In fact, there may be reason to believe the opposite. And the last thing I just say is different businesses have different financial considerations. Like Elon Musk's first company was not a rocket company. It was a restaurant listing company, as you know, from like watching him from that, earlier, stage in his career.
It was very,
and it's like, Zip2. And so, there's a reason why a company like Open Door or a firm that have high capital requirements were created by deeply respected multi-time founders. Is not every business can match the personal circumstances, either in terms of need to make money or of the ability to raise capital of every founder. And so you got to pick a kind of business that suits your circumstances as well. So there's some founder business model match as well.
And it circles back to what we started out talking about, is just defining the scope of the project. So keep your full-time job, keep your multiple jobs if you need to, in order to make it work, but find a way to really test this in a manageable way to demonstrate that you're onto something with that idea, and then go out for financing.
Yeah. I think that's exactly right. Exactly right. Well, okay. I think we've given people a lot of stuff to think about. There's more in our online operating manual, including this great piece from another investor about the cognitive distortions of founders, the slight craziness that they have. But these sessions come from you in the audience, your comments, questions, thoughts, etc. And thank you, Karin.
Thank you. And as everyone knows, we love this topic. So come talk to us if you want to continue the conversation.
Oh yeah, good reminder. Yes, please hit us up.